The new Consumer Price Index report shows inflation in the United States eased again in January. The Consumer Price Index rose 6.4% in January compared to a year ago. That's down from 6.5% in December, but it's still higher than expected. So what does this mean for future interest rate hikes in the U.S.? ABC News business reporter Alexis Christophorus is here to break down the numbers for us. Alexis, this is the 7th straight month that price increases have tempered. But as you mentioned, month over month, we're actually up, and we're still far off that 2.2% the Fed is targeting. So where does this leave us?
Still far off. I mean, inflation at 6.4%. The Fed wants to get it down to about 2%. So we still have a ways to go. I'm going to call this a mixed inflation report. It's sort of one step forward, two steps back on a yearly basis. Good news here. Inflation up 6.4%, but a little bit better than where we were, up 6.5%. Also, month over month, this is more than expected. Prices up 0.5%. And when we dug into this report, we found that gas prices were a big reason why. You know, we had enjoyed such a reprieve from higher gas prices, and now that's not the case. Gas up 2% month over month. Food prices still stubbornly high, up 0.5% month over month. And rent prices, Diane, this is where we're really getting socked. Rent prices up year over year, nearly 8%, month over month, more than 0.5%. And rent makes up about 0.5% of this total inflation index.
Now, the Fed has been imposing interest rate hikes to try to slow down inflation for months now. So what does this say about how effective that strategy has been?
You know, those those interest rate hikes are starting to seep through the economy. We're starting to see it take hold in certain areas of the economy, but we still have a long way to go. And this is because inflation has now been with us for a few solid years, and it's sort of embedded itself in certain areas, so it becomes more stubborn for the Fed to be able to get in there. Remember, the job market remains very high. Wages have to be high because businesses need to stay competitive to gain workers, and that's keeping pressure on inflation. Higher wages means higher inflation.
Now, what does this indicate about future rate hikes and the possible risk of a recession if the Fed pushes that too far?
I don't think today's report deters the Fed from its focus, which is to still get inflation down to that target of 2% and most likely raising interest rates again by 1/4 point at its March 22nd meeting. But remember, we get another employment report between now and then and another monthly inflation report. We'll get a better feel for where both those things are to start off 2023. But as Fed Chair Powell said just a few weeks ago, their work is not done, and they realize that more interest rate hikes are to come this year.
And Alexis, when you look at the big picture of this all and the timeline of it, during the pandemic, we saw things drop in prices. We saw rent prices plummet in certain areas. So how much of this is sort of an expected return from those prices, and how much of this is really a source of concern?
Some of it is, and that's a good point. For instance, supply chains have now eased, and transportation costs have come down in a big way. So things are starting to normalize there from the pandemic, but there are some areas where inflation is just so embedded, despite the pandemic, we just can't seem to get rid of it, and that includes things like rent and food. Energy is always so volatile, but it's going to take a lot more from the Fed, and perhaps even more aggressive than an interest rate hike of 1/4%, maybe 0.5% at their next meeting. We'll have to see.
All right, we certainly will. Alexis Christophorus, thank you.
Thanks.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.